an extraordinary African leader whose impact spans across finance, development, governance, and women's economic empowerment across the continent. Our next speaker has served on senior roles across government, the United Nations, the African Development Bank, and major institutional boards. She joins us with a wealth of insight, experience, and deep passion for building an Africa where opportunity, inclusion, and progress are accessible. I'd like us to also stand. Okay, let me first wait for people to settle. I like the sound of my own voice. There we go. As we settle, but I would like us to stand because she's legendary. I think Mayor Dinewa did mention it's the Jubilee of the 70th Jubilee coming of the women who marched for us. And if you don't know her or you've never heard her name, I question you. But I'd like us to stand and give a standing ovation to the one and only Dr. Fraser Moleketi.
Thank you. Good morning, everyone. It's great to be here this morning. It's quite an opportunity to be with an intergenerational group and a group from across different sectors of society. So we have the women from Yugi here, but you also have powerhouses in risk management. You have people from the commercial sector, commercial finance sector. And you have Zamkita here. So everyone is in the room, and I don't know whether I'm really answering the question, but what I do know is that I hope to provoke a little bit. And I hope to provoke and also put definitions on the table in order that we know what we're challenging at a given point and why. What we're challenging in the public sector and in the private sector, and even in the banking sector. Because sometimes some terms are thrown about, bandied about, and we become defensive. And as we become defensive, we're not always sure why. And you know, certain definitions can creep in stealthily. And at the end of the day, when you have a clawback, or you actually find yourself in a more difficult situation than you started out, you find that you have also been complicit because you accepted the definitions. You thought they were correct. You thought you were not progressive enough at a given point. And I'm saying guard against that, because the Trojan horse comes in different forms. And let's watch that space. So the ministry and the acting DG, so effectively the DG, has spoken. We've heard various other people speak. And let me pause and don't record this. I'm short. And I'm wearing sneakers not because I want to be fashionable and try to compete with the Gen Zs. I've just had an arthroscopy, a small operation on my left knee. So it's more sensible to wear sneakers. So let me put that on the table, because if I had heels, I would have been slightly taller and my computer wouldn't hit me on the middle of my nose. Also, because my phone is running out of battery, let's try. Let me try. I may just solve this problem. Well, I'm not going to, so let's see. So on the theme of reimagining financial systems, architects of the new African reality, and I have acknowledged all, and this is diplomats, grassroots activists, professionals, and everyone in the room, I do want to say, as stated before, that the historical convergence of this moment and transnational solidarity is important. We're at a profound intersection of the anniversary, and I speak about the Beijing plus 30 anniversary. We are at this intersection, and we've heard that of the 70th anniversary of the Women's March of 1956. Also, in South Africa, June 16, 50 years of that. So we recognize that the 1956 mobilization was not an isolated event, but a continent-wide wave of women's resistance. It mirrored the fierce transnational feminist militancy of the 1950s, led by pioneers such as Ayo Keita, Funmilayo, and I'm going to mispronounce this, Ransome Kuti, and Margaret Ekpo, a powerful hidden history of African women organizing across borders. Maybe I should sit down, then I don't feel so.
You want us to plug in and be the whole?
Yeah, no, if someone just brings me a bit of a thing to stand on, I should have done that earlier if they give a bench, but I'm okay to sit. You know, so we draw our modern mandate from the shared Pan-African legacy. As the Gender Plus 30 movement, we are not a coalition. We are a formidable civil society movement, a vast ecosystem that unites and encompasses diverse coalitions, networks, and grassroots activists. 30 years ago, the Beijing Platform of Action established a transformative, normative framework for gender equality. It was a watershed moment in our history, and as we gather today, we look ahead into the future, and this is what your work for the next 2 days are about. We must confront a stark reality. Across Africa, women and youth play indispensable roles in every sector. They power our agriculture value chains, they drive our digital economies, and they absorb the shocks of a volatile global order. Yet our financial systems, our legal structures, and our macroeconomic policies are still operating under an outdated architecture. And this we heard a lot about this morning, and I restated. Our architecture that frequently renders our greatest demographic assets invisible. Reimagining financial systems requires a fundamental shift in perspective. We must move away from treating women and youth as mere beneficiaries of financial inclusion to empowering them as the architects of the systems themselves. And I want to emphasize this because this is not just words. It's empowering them as the architects of the systems themselves. Because far too long, financial policies, credit products, and regulatory frameworks have been designed without women or young people meaningfully at the table. Let us be clear. This is not a matter of equality or social justice. It's a profound structural design flaw. So it's a profound structural design flaw. When the realities, the risk profiles, and the economic behaviors of the vast majority of our populations are excluded from the blueprint, then massive gaps in access and outcomes are not an accident. They are inevitable. And let's be clear about it. And I say this unapologetically. Right now, across the continent, there's an immense momentum behind what's referred to as the new African financial architecture for development, NAFAD. And this is being driven by the African Development Bank. And they're doing so along with the African Union. Are those of you in the room aware of it? Do the women from UGI know about it? Are you engaging in the shaping? African leaders and financial institutions are rightfully calling for financial sovereignty, seeking to mobilize Africa's estimated $4 trillion in domestic savings to close out our development financing gap. At the end of January, there was a meeting that took place in Johannesburg, South Africa. And it had leaders from development finance institutions there, from commercial banks, from pension funds, from smaller entities, and they were discussing this NAFAD. Were you in the room? And I leave that question. So I submit to you today, our architecture is not new simply because it is managed in Africa rather than Washington, London, or Paris. It is only new if it fundamentally changes who the system serves. That's when it's new. And you said, let's reimagine. So we're reimagining. If NAFAD simply replicates the patriarchal, asset-obsessed lending models of the past, we will have failed. To build a system that actually serves the lived realities of our people, from the rural woman farmer, whether in Ugi or in Senegal, to the dynamic youth entrepreneur scaling a logistics business across the SADC region, we must weave them into the very structural steel of this new architecture. And we don't come later. So many of you in this room may not yet have seen the foundational document recently presented by our Beijing Plus 30 Women Economic Development and Financial Inclusion Working Group. Zimkita has just joined that particular group recently. They work tirelessly, they trade relentlessly, but because of the, just hold, let me step back a little bit. So I want to bring this into the room, and I want to bring you into that room and share our core thesis. Our theory of change recognizes a brutal paradox. So women and youth are the engine of African economies. And we hear presidents say, our youth could be our economic dividend. Our demographic dividend. Or our demographic deficit. We hear them call on the women during elections and other times. And yet, women and youth, who should and are the engines of Africa's economies, they are structurally trapped in what we call the survival economy. So we applauded a young woman starting with 50 Rand. And she's done an amazing job. But there's still a trap there. And what I'm raising today is that the tireless work that she and they are doing, they trade relentlessly, but because of the entrenched barriers in the financial market, they cannot scale. So our mission, your mission, and the powerhouses around that table there, and the other tables in the room, I think what's really necessary is to ensure that our mission is to transition them from the survival economy to the growth economy. And it's about what should be done. The working group designed a 3-pillared implementation framework to execute this transition. And it's no different from what other networks are doing. So let's look at this. The first pillar is to address a foundational truth. Yeah. And this has been said earlier this morning. We cannot redesign what we refuse to measure. For central banks, and we hear that in the New Faces, New Voices, there is a working group of former central bank governors, but it's necessary, their mandate is dual, to expand financial inclusion, to catalyze youth entrepreneurship and broader economic development while fiercely guarding the stability of the financial system. Moving from asset-based to behavior-based credit requires focused public administration reform, and DG, that's where you and government comes in. And that's where the center of government must make the difference. It's necessary to particularly do that, to build resilient, citizen-centric institutional frameworks that can govern algorithms just as effectively as they can govern traditional bank capital. And I want the people from the financial service sector to pay attention to this. It's important. Bias, and this is where I want to come to bias, and it's to the point that I said we must be careful of the silent Trojan horse. Bias is really born into codes itself. So the algorithm itself, it's usually inherited from historical data that's used to train the algorithmic models or the models that are used by the financial sector. The regulators order the entire data life cycle. And this goes to the point of Reserve Bank governors and former governors. They must help to do the homework. On data governance, and this is for the risk people, and the chair of IMSA is sitting here today, auditors trace the training-based data back to its source. If a model is trained on 10 years of historical banking data, where women were systematically denied loans by human loan officers, the algorithm will naturally learn that being a woman correlates with unlikely to have a loan. And regulators check how these historical bias were neutralized before the training even began. On governance frameworks, auditors increasingly align with formal standards, and I leave that there. Regulators cannot supervise a black box, and neither should they. So as machine learning models drive credit decisions, institutional capacity must adapt to audit code, not just balance sheets. And bias testing, regulators must require institutions to prove that their algorithms do not replicate historical biases. For example, unfairly penalizing women-dominated sectors or specific geographic areas. You know, areas that are redlined, so you can't get a home loan, or you cannot get insurance because you may be in a flood zone. And this is what we must challenge. Otherwise, everything else may just still be good talk about the rhetoric, but we're not dealing with the underlying causes. And then there's also the second issue of explainability. A citizen anywhere on this continent has the right to know exactly why they were denied credit. Regulators must mandate that automated decisions to be explainable so that entrepreneurs can correct their behavior or dispute inaccurate data. How many times have you been refused a loan? She's indicated that she went to a particular source and didn't get a loan, or not a loan. I mean, she was probably looking for a grant, for grant financing. But you need to understand why. Because otherwise, what are you correcting? What are you looking at? You know, this we must deal with as well. So much of the economic activity driven by women and young people on this continent, and now particularly informal cross-border trade and the massive subsidizing force of the unpaid care economy, goes entirely unrecorded in official statistics. But it's because this work is invisible to the system. Our institutional planning is distorted. We rely on generic policies, and these policies fail to address the specific barriers our people face. So to change this, we're looking at, as a working group, in the Beijing Plus 30 working group, we're looking at introducing the African Women's Economic Empowerment Standard. And we're asking ourselves that question, what must that standard look like? So as the women of the continent, and out of this meeting, based on the questions you're dealing with, that has been placed before you, what should such a standard look like? What would we like to see? So we're not creating another burdensome compliance checklist. We've got enough of this. The standard is a practical accountability mechanism that overlays existing frameworks. So SADC, for example, has a gender statistics strategy. Let's overlay it with us. Let's see what that should look like. And even at a national level, DG, we want to challenge you. Let's see what can overlay that. What must it look like? So it begs us to ask a revolutionary set of questions of our financial institutions. Do you have a formal mandate? Are you tracking sex and age disaggregated outcomes at the board level? Are you allocating catalytic capital to youth and women's-led enterprises? It's a question that should be answered. There's a need for accountability. So by institutionalizing this standard, we force the financial ecosystem to really see women and youth clearly. Because visibility is the absolute prerequisite for structural redesign. Because you can be easily invisibilized. And I'll come to that particular aspect in various ways, and we fall into that trap. The second broad pillar is rethinking risk, capital, and value creation. So the second pillar focuses on capacity building and capital mobilization. And this is what everyone is doing at the moment. But we're saying this is where this new African financial architecture must completely rethink how we assess risk and define economic value. Traditional financial systems are obsessed with static assets by demanding formal land titles, commercial property, or a heavy machinery as collateral. The current system inherently penalizes young people and women who have been historically locked out of asset ownership. The system measures you by what you own rather than how you behave. And when you've listened to some of the interventions earlier this morning, the interventions that are there, that's involving women's empowerment, building women's asset bases and all, that talks about how women and youth behave. And there's ways to measure these. And we're saying, let's do that. So feminist economists have long warned us that the way we define productive collateral is deeply biased. And there's a brilliant woman economist, Mariano Mazzucato, who reminds us that markets are not naturally occurring phenomena like the weather. So markets are not like the weather. I mean, the weather's a little bit unpredictable at the moment, and You know, there's various phenomena, but generally you can predict them. The markets are outcomes of how we design them. And for decades, the dominant economic narrative told us that the state should get out of the way and at best step in merely to de-risk the market for private capital. And this has led to a highly extractive financial sector. And it didn't help that the state didn't step up as well and didn't operate as effectively as it should have. And I'm going to make a general claim now. When I was in government, and the team that stepped down resigned from government in 2008, we were very clear about the state we were building. The public service looked different. Local government looked different. And I'm not just making a baseless claim. Go and look at the numbers. Data speaks for itself. Because we were clear that the state wasn't just functioning for the few, it was functioning for the millions. Because many of us in this room, myself included, we can afford private health care. We can get by, some of us barely, on private education. And we can look at various other interventions. But the millions out there don't have that luxury. And that's where the state must function. The public service must function. But you see, we've been lax on accountability. And I can bet, at least for the South Africans in the room, that you know someone or have a relative who's working at some level of government. And yet you are ready to blame leadership and you don't hold that relative accountable and say, that salary you get monthly, what are you actually doing to earn it? I'll leave that point with you. I think it makes the point that's required. So we must move away from the passive role of market fixing to the active role of market shaping. We must shape a financial market that values the actual economic footprint of the African woman and the African youth. And I use African as inclusive. All of us born on this continent, where the continent beats in our hearts and flows through our veins. So we also know that across the continent, and specifically in the SADC region, and I want to narrow down, and in South Africa, our economic context is defined by dynamic informal economies. A young female trader moves goods between Zambia and Zimbabwe under the African Continental Free Trade Agreement. And that trader may not have a formal bank statement or a title deed, but she generates a rich, highly predictive digital footprint and years of mobile money flows, flawless supply chain reliability, and consistent utility payments. But I want to jump to pillar 3 before the moderator sort of stands up. And I do want to say I've been called on to do a keynote address, so I'm going to take liberty for a few more minutes on this. So this takes me to the third and final pillar: national and continental macroeconomic policies. Expanding basic access to microfinance without addressing the broader macroeconomic environment leaves women and youth stranded in a shallow system, highly vulnerable to systemic shocks. True inclusion requires a whole-of-market approach. Feminist macroeconomists challenges the myth of a neutral national budget. The fundamental challenge, and this is your Trojan horse, the fundamental challenge with the concept of gender neutral is almost universally applied as gender blind. It operates on a false premise that if a policy, algorithm, or financial system simply ignores gender, it naturally treats everyone equally. But if you cannot drop a neutral policy, but you cannot drop a neutral policy in a structurally unequal society and expect an equitable outcome. And I leave that thought with you. So when systems are designed without a specific gender in mind, and even race, I would argue, they do not default to neutrality. They default to a historical baseline. And in the instance of gender, one which is inherently male. And if you look at the breakdown in practice, I can actually share the longer paper that talks about the myth of the level playing field, because a policy is only truly neutral if the environment it enters is already perfectly equal. And because of our legal, social, and economic systems that have historical asymmetries built into them, a neutral rule usually entrenches the existing disparity, and that's for across the continent. And the unpaid care burden skyrockets, pulling women and girls out of the productive economy to fill the gaps left by a retreating state. I want to conclude. So the logic of the framework and the reimagining is unassailable. If we generate the right data, if we build genuine capability pathways, if we actively shape capital markets to value the actual economic behavior of our youth and women, and if we align our macroeconomic policy to support rather than extract, we will trigger a self-reinforcing cycle of inclusive growth. Through the phased tiering of the new African women's economic empowerment standards, and the focus that we've heard that her economy 2026 wants to take forward, as well as our fee. If we want that to happen, we've got to actively shape, as I said, the capital markets to value the actual economic behavior of our youth and women. And if we have spoken about aligning our macroeconomic policy to support rather than as extract, we are triggering that reinforcing cycle. So through the standard, we're creating a culture of continuously learning and unyielding accountability. We're moving away from declarative statements towards variable systemic outcomes. the blueprint for the new African financial architectures on the table. It's an architecture that rejects the false divide between the social and economic, and it leverages digital innovation. It demands an agile, mission-driven public administration. And most importantly, it places the African women and the African youth not at the periphery as beneficiaries, but at the very center as the architects of our continental destiny. So let's grab that opportunity. Let's be there as it shapes, because once you come and the architecture has been designed, it's too late to change. Thank you.
Don't run away, don't run away, don't run away. I know the guests, they didn't ask me to do this, but I do want to open because she's keynote. Before we do that, are there any questions or comments? I know we haven't sort of given space, but she is our keynote speaker, and we just want to find out if there are any questions or comments. I'm going to ask the gentleman at the back if he can come with the mic. We've got a hand in the middle table over here. I'm sorry to put you on the spot.
Good morning. I'm very interested in your topic simply because my topic for my PhD is around black women African entrepreneurs. I'm specifically looking at trying to bridge gender gaps and paving a way for African women entrepreneurs to expand their businesses beyond borders. So I'm interested in the paper that you are reading and the one that you said you would like to, you can share with us. So, yeah.
I will do that.
Thank you.
So it will be available, and it's the same paper. You're quite open to that, and seeing that you're doing your PhD as well, I'll ensure that you get the link through Zimkita on how to join the group that is Women, the Economy and Financial Inclusion, because we have academics, we've got financiers, we've got investors, we've got bankers, all part of it. And some of them are involved in the shaping of this new Africa financial architecture. Welcome.
Thank you.
Thank you.